Hello, welcome to the program. I'm Ladi Williams. Let's get a check on the markets now, starting with the metals market. We see gold holding steady as the outcome of the tightly contested U.S. presidential race becomes more apparent now. We see spot gold unchanged, $2,749 per ounce. We've seen a strong U.S. dollar today. So we see for the U.S. gold futures, $2,749 per ounce, down about 1.16%. So we see the futures pointing to a mostly negative sentiment there, but spot gold unchanged at that moment. So we see investors there still trying to assess what's playing out with U.S. politics. Then for oil, we see oil prices fell more than 1% today, with Brent crude futures down about 92 cents, about 1.22% to trade at $74.61 per barrel, while U.S. grade there, that's the WTI, that's talking about the oil market, that's down about 1.15% at $71.16 per barrel. So we're seeing the impact there. Some markets are looking really good at this point, while some markets are taking the back foot. Joining us now to discuss, we have Mr. Dosu Odekunle, is the founder, managing director of Marquee and Synergy International Limited. That's an oil and gas trading company. Great to have you on the show.
Thank you, Ladi. Thank you for having me.
Right. So I see you see what's playing out in the oil market, but given Nigeria's heavy dependence on oil exports, how about Donald Trump's energy policies? Especially his stance on fossil fuels and energy independence. How would that affect Nigeria's economy and its oil market share?
Well, if anything, if we go by what has happened in the past, Trump's policy focuses mostly on America first. So we expect to see a repeat of that. I guess maybe there's nothing to lose in this second round. So he's probably going to focus on, leaving a legacy of, the American first policies. So what I think will probably happen is he will face China and Russia. Policies will be I think those where we'll see policies, birth first in terms of China and then how it's going to deal with Russia. And we already know that he's always favored increased oil production for the U.S. And increased oil production obviously means lower crude prices globally. So that will affect the prices. The thing which we're unsure of is, U.S. has a wonderful relationship with Saudi Arabia. And I know Arabia being one of the OPEC parties, the members, they would like to see prices kept at a particular level. So we wait to see how that would play out. But definitely, increased production in the U.S. will see a fall in prices, and that would also, obviously impact Nigeria, because we thrive on higher crude prices for our economy.
Right, definitely a hit for oil revenue. But, when we talk about PMS and fuel prices, even though we still see that debate about which fuel is better for Nigeria, is it better for Nigeria to import fuel or produce locally? We have that debate going on right now with the oil marketers and Dangote refinery. But, talking about cheaper oil, that should be good for PMS prices in Nigeria.
So it depends. Do you want my oil trading response or a customer response?
Let me have all of them at this point.
Okay, so let me start as an oil trader. Well, in trading space, competition is always good. It brings innovation. It opens up new shall I say, secrets in the industry, especially when you have new entrants who want to play in that space. Now, obviously, we can see that Dangote's refinery is a game changer that has come to disrupt the whole oil and gas space. I probably see we will eventually arrive at an equilibrium when the refinery is fully functional, where there will be imports, obviously, from US and third parties, and then the trading market itself will continue to import till the equilibrium is reached. I say that because as long as there is a free market, everyone is going to look for an opportunity. Dangote, being a very large conglomerate, cannot actually turn around his response time as fast as smaller trading companies. So that vacuum will always exist. He would probably focus on larger targets, larger volumes to fill that space as he approaches supply sufficiency and efficiency. But because of that vacuum, the smaller companies will actually continue to import gasoline for that space. I think that is the new market as it will evolve. I don't think it's going to be one party has all as it was in the past with NNPC alone.
All right, and we're seeing the dollar rally. It hit a high this early with the trade. So, definitely that's more pressure we're seeing for, emerging market currencies. So talk to me about the immediate impact for fuel importation to Nigeria.
Sorry, I didn't get that. Could you repeat your question?
Yeah, we're seeing the US dollar, the DXY, has rallied against a basket of currencies. And earlier today, and hit about 105 points. That's the US dollar index. So we're seeing the dollar, explode at this point. So talk to me about fuel importation at this time when we're seeing the dollar rally.
Okay, so I mean currently as we sit, a higher dollar, it may shock you. The impact is not direct. It's probably indirect. I say this because while people are importing at the moment, that's supposed to create a pull on the dollar. However, currently, Dangote receives his crude in Naira. So that volume of dollar that would have existed before is not there. It's literally almost as if it was a pseudo DSDP kind of structure. He's receiving, crude in dollars and then supplying the market. Is receiving in Naira and supplying the market also in Naira. So that volume of FX is no longer there as such. So the pool of cash that will be used for imports will still be the same pool of cash as if we were selling crude directly into the market. So, I mean, there will be a continuous rise in FX. That's my belief in terms of the demand. But like I said earlier on, there will be an equilibrium as his supply improves into the market. That niche space where smaller traders are importing will sort of maintain its volume as such.
Right.
So I don't see a sharp spike in the dollar rise or demand, but it will continue to rise.
Right, and definitely, I'm just hoping for cheaper fuel prices. At some point, let everybody just come to some kind of understanding. At some point,
everybody wants cheap gasoline.
Right. So, looking at the market now, looking at the oil market, is it time to go short, or are you ready? Would you say that kind of trader is late to the party?
This is in lieu of the are we referring to Donald Trump's return, or we're still looking at what Dangote is doing? No,
it's more like, Donald Trump's win at this point. Right? We're seeing oil prices already react, WTI, Brent already down. So if you're sitting on the sideline with all of that cash, are you shorting oil at this point, or you're late to the party?
No, I don't think you're late. So currently, I mean, India is supplying Europe strongly on behalf of Russia, allegedly. So if the US is going after that market in terms of when they start producing, part of his policies are to drive increased production. They need a home for it. And obviously, I don't think that is Africa. It will be Europe. Maybe they'll go after India and into the Middle East space to move more of their oil out. It's a good time to take a position on oil. But, as with all positions, it can go south pretty quickly. Right.
So definitely, as an investor, you need to check all of those parameters before you make that investment choice. But thank you so much. It was great having your perspective. Mr. Dosu Odekunle is the founder, MD, Market and Synergy International Limited. Thank you so much.